So even though I've been a little bit busy and haven't been posting, that doesn't mean that I have not been trading. As you guys can see, over the last couple months, specifically the last 3 months, we're up close to $4,000, which is a little over or a little under 50%. It's just 44%. So we've been doing really good despite the fact that the markets have been volatile. So I'm going to go ahead and explain in two parts what I've been trading and how it is that I've managed to make such good returns considering the volatility in the markets as of right now. Welcome back, everyone. If you enjoyed the content, make sure to leave a like and subscribe. So as I mentioned, what I'm going to be doing today is going over some of the trades that I've been taking over these past couple of weeks. This is going to be a two-part video just because I haven't posted in a while and there's quite a few trades that I want to go over. So we're going to go ahead and start off with the first trade, which was on JD. And this trade was actually a couple weeks ago because, as I mentioned, I've been a little bit busy, so I haven't been posting too many videos. But what I ended up doing on JD was buying a directional play. I ended up buying a couple of calls. I believe it was 4 calls. I bought them at a price of $2.31, and this was a day trade, I believe. Yeah, we sold and bought on January 12th. So like I said, we bought them at $2.31 and we sold them at $2.43. So all in all, it was a quick and easy about $60 gain on this one in a matter of a couple of minutes. I think the total time was around 20 to 30 minutes. I didn't end up holding too much because at the time, this was, like I said, about 2 weeks ago, it was oversold. We go ahead and look at the chart. We can see that JD has been having a lot of really big swings, and so as what I see from that is opportunity to profit. You can see, even though the chart's not the best on Robin, and you can see that there's a consistent sort of support where JD seems to be bouncing, even though it might not be a big bounce every time, but sometimes, even if it's a decent bounce, like maybe 50 to $1, that's still a lot of profit that can be obtained from those moves. So nothing too complicated from this trade. Like I said, just trading basic support and resistance lines. So that's pretty much it for this trade. Now let's go ahead and move on to the next one. So the next trade is on SPY, and I actually ended up taking 2 different trades on this one. They were on separate weeks. One of them was 3 weeks ago and the other one was 2 weeks ago. So the first one that I'll go over is actually they're both calendar spreads, so they're both essentially the same strategy, basically profiting from the decay of one option while the other option goes up in value. But the first one that I'll go over was a calendar spread that I entered on January 13th. So what I ended up doing was buying 2 calendar spreads at an average price of $66. Which was a total price of $132 for both options, and I ended up selling it the next day for $71 each. So all in all, we profited around $10, or basically holding just for 2 days. I know that might sound like a really insignificant amount of money, which in hindsight it is, but the percentage wise, I don't recall it off the top of my head, but you can go ahead and do the math. I think it was somewhere around 15 to 20% in the matter of just 1 day. So the percentage wise is right there. And like I said in the last video, I'm sort of still kind of familiarizing myself with trading credits or trading calendar spreads. So it's something that I need to get a little bit more experience until I feel comfortable enough to throw more money into these positions. The next position on SPY was also a calendar spread, like I said. On this one, the trade was a little choppy. And the reason why I say that was because at one point we were up like $60, and I should have sold. But the thing that ended up happening was that I actually ended up waking up late that day, and so I wasn't on the computer to be able to lock in the profits, and so we missed out on what could have been a really nice return on a mere $184 investment. So we still ended up profiting. We ended up profiting around $6, which in hindsight, a gain is a gain, and it's any type of win is better than a loss. But it would have been much better had we woken up earlier and been able to lock in that $60 profit. But I'm not complaining. We could have just as easily lost $60, and that could have been a lot worse than making $6. So that's pretty much of that trade. Now let's go ahead and move on to the next one. So the next trade that I ended up taking was on SPC, and this is one of my recently favorite stocks, just because it has a lot of big price movements in the matter of weeks. So it's not really like something that's going to happen or going to move like from a day-to-day basis, but it'll have like $2 to $3 moves in the matter of a week or two. So there's that volatility factor in it, but there's not like too much volatility to the point where you think you're going to lose a lot of money. And so with that volatility, that also increases the prices of options. And as an option seller, that's good for us. So what I ended up doing was buying, or I should say selling the 11.5 strike put on January 15. We received a total credit of $38 for that. And so by the end of that week on January 22nd, the price of SDC was actually below $11.50. And we were forced to buy the 100 shares, which were 1,150, which isn't really a big amount considering we have a account size of about 13,000. And so what I had intended to do on SDC was the wheel strategy and sell a call, but I ended up selling a put on accident when I thought I had bought a call. And so on Monday morning, when I saw that the price of SDC was skyrocketing and what I assumed to be a call option skyrocketing as well, I was a little bit confused, because usually when you sell a call and the price of a stock is going up, the price of the call is also going to go up. And so in my eyes, I was a little bit confused as to why a call that I had sold was going up in value at the same time that the price of the stock was going up in value. So I ended up taking a closer look, and I realized that I had accidentally bought or sold a put, and that is why it was showing profit. And so because that wasn't really my idea behind this trade, I ended up closing the SDC put for a profit of $17, and I also sold the SDC shares that we had for around a $45 profit, I believe. Let's see, we bought them at 11.55 and we sold them at about 1.93. So we about $43 gain on that. So overall, in the matter of around a week and a half, we managed to gain about $100 on this investment. Pretty good profit considering the incredibly short amount of time. Obviously on this trade could have gone significantly better had I paid a little bit more attention in what I was doing, because as you guys can see, this past couple of weeks SDC has just been skyrocketing. It opened up, like I said, Monday morning. It had a really big gap up from around 11.50, or actually 11.30 I should say, to all the way up to around $13 in the matter of that day. It kind of retraced a little bit back down to around the $12 range, but after that, it continued to go higher all the way up to $15 at one point. So overall, this trade could have gone a lot better had I paid a little bit more attention to what exactly it was that I was selling, and that is my fault on not, like I said, not paying too close attention to what it is that I was selling. I did know what I was doing, but I ended up buying something that I hadn't intended to do, so if that makes sense. But overall, not going to complain about the $100 gain on this. Pretty easy and low risk. So that's pretty much it for this trade. Now let's go ahead and move on to the next one. So the last trade that I will include in this video is a trade that I took on Apple, and this actually has been a couple of trades because all in all, it's been a trade that went on for about 2 weeks. So on January 11th, what I ended up doing was buying 100 shares of Apple at an average price of $120.75. And so what I ended up doing was go ahead and sell a covered call on that. I sold the $129 covered call for $225. So right off the bat, we were guaranteed a profit of at least $225. However, Apple ended below $129 in that week, and we got to keep the premium and the shares. So going into next week, what I ended up doing was selling the $129 call once again, this time earning a little bit less of the premium, because I believe this was the week of I don't remember if Apple just opened up lower on Monday, or if this was the week that we had the Martin Luther King Day and we had one less trading day, and that's why the premium was significantly less, because as you guys can see, it's almost $100 difference in between the premium. So I'd have to go back and check the price of Apple around that time, but we got $103 off that premium for that week. So all in all bringing our total profit of that trade up to around $330. However, we did get a sign on Apple that week and we had to sell these shares at $129, so we got another $25 off that trade. So all in all, in the matter of a little bit over a week and a half, we managed to take the investment, or trade I should say, and profit around $350 off this trade. So all in all, pretty good trade, not really too risk involved in that one, just because it's Apple and it doesn't have huge price movements. However, had we held on a little bit longer, as you guys can see that Apple, right before this week, it was trading right around 140, so it would have been nice to keep those shares. However, Apple right now at around 131, going into tomorrow on Monday, definitely looking like a possible trade that could come out of this. I've been going over some numbers, and I think that potentially Apple is in a very good spot to place some call options on it, and I still have to think about it exactly how I'm going to position the trade, but I can definitely see myself within the next week buying a long option, or I should say long position on Apple. So I'm going to have to, like I said, go ahead and run some numbers. But that's pretty much it for this part of the video. Like I said, I still have a lot of more trades. I think like 5 or 6 more trades I want to explain. However, because I don't want to make this video super long, I'm going to go ahead and wrap it up for right now. And I will post part 2 of this trade recap, hopefully later on in the day, if not by tomorrow for sure. But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next one.